a bit of time just trying to thinking about AI and how to incorporate it to the kind of work that we do. Um, Now, of course, there's a couple of add-ins that you can put on Excel to just analyze data, rather than using your pivot tables and so forth. There's a couple of add-ins that once you put into your Excel, they're able to you're able to play around with. Once you open a spreadsheet, you're able to play around with the data in terms of asking key questions and asking key graphs to be drawn, etc. And you'd almost imagine that's a fast base level of what this is going to look like, where if you have data and you need to analyze that, then it's going to be easy to be able to use some of the AI functions. And in this case, I'm talking about ChatGPT. But so far, I have not seen, AI models which are able to create financial models from the beginning till the end. And I guess the challenge that's been there, at least in my view, is that there's a lot of custom building that happens when you're building financial models. I mean, we've gone as far as looking at people who've created a standard financial model that you can take, and you can then be able to. I mean, as use a company that we've engaged with, and what they've created is a platform online where you can go in, and all you're supposed to do is to key in different variables. For instance, it tells you what's the growth rate of the company. You key in the growth rate of the company. It asks you, what's the beginning turnover? Do you want a monthly financial model, or what do you want? All those sort of like a kind of variables. And then it's supposed to spit out the financial model to you at the end. But then the challenge that we found with those kind of tools is that the customization element gets lost. Yeah. Because as you can imagine, as we are building these financial models, there's a lot of customization that we're asking ourselves. For instance, it's I don't know, the different lines that you have for a specific financial model. You have, in this case, you have local sales, you have export sales that you're trying then to build out, right? And for each of those is different growth rates. And so far, I have not seen, okay, let's put it this way. While you can be able to use some of these tools to create the first draft of your financial model, there's a lot of additional work that you'll have to do once you get that first draft of your financial model to get it to a final state, to a certain extent that at times building from scratch using Excel is probably easier than a situation where you're saying that let me use this tool to create my first version of the financial model, then let me improve it, right? Which is similar to what you see nowadays with AI. If you're trying to write a blog and you tell AI, write for me a blog on financial modeling, it will give you a draft. But then the challenge is that to take that initial draft to the final version, you might end up spending just as much time, or you might end up saving a small amount of time to be able to get yourself to the point where you have the final financial model, right? And so AI at the moment where it is at least the tools that I've seen, and I've gone through several tools, I found that they're not yet at the point where you can say that you can create a full financial model. And even if you went ahead to create it, there's a lot of human intervention that you'll have to put to be able to get the model to the final bit. Yeah. And so that's why I think Steve Ogada, who was in the previous session, mentioned that his view is that Excel, at least at the moment, is here to stay. And you still need to have those skills because even when you create something, I mean, and you've seen this, as I mentioned, from the large language models, when you're trying to create blogs, you're trying to create posts for LinkedIn, etc. There's still a lot of work that you need to put in after that. So I think I wanted just to share that from that perspective. That was the first point. The second point was about financial modeling standards, and if there are other financial modeling standards. I think there's a question that was asked around that, and I thought maybe it's good to just share just a couple of standards which are out there. For us, we found that FAST has been by far the most useful, and that's what we played around with quite a bit. So let me just pick. There's an article that, and Leanne, maybe do you have the article? I think I must have forwarded it to you, Leanne, if I don't know that I did, which was speaking about other financial modeling standards. And I don't know whether you could kindly just type it into the chat so that anyone can be able to review that. Because indeed, there are other financial modeling standards. There's one by a large financial modeling house called Corality, and it's called the Smart Financial Modeling. Corality was acquired by Mazars. So it's Mazars Chorality. It's called the SMART Financial Modeling Standards. There's one by I forget the full acronym, ICEAW. ICAEAW. It's a UK-based organization that has developed some financial modeling standards. Leanne, if you see the article that I shared with you, if you kindly just load it in, I think it would be useful for the different people just to, have a look at that. However, what you'll find with all financial modeling standards is the idea that they're trying to create a certain set of rules that will make financial models easy from an interpretation perspective or for the user, right? And of course, FAST for us is something we adopted a long time ago. FAST is currently being used by the IMF for building their own financial models. There's a couple of signatories. If you go to the website, you'll find there's a couple of signatories. So it has taken, I think it has moved a bit further, in this case, as a standard to be used for financial modeling. And so that's why we preach FAST a lot, and we find it very easy to use. I played around with the SMART financial modeling standards. I didn't like them as much, but when I started working on FAST, I found it to be, very methodical in terms of being able to use that. And then the other thing that FAST has done, which is different, is this idea that with FAST you can get certification. I think with some of the other standards that I have seen, there's no certification. So, for instance, there's something called the financial modeling, I think, championship or competition. I can't remember, World Cup or something. The financial modeling World Cup does not choose a standard for financial modeling. What it does is that you build whatever you build using your own methodology. They just want you to arrive at the solution to a certain extent. But a standard is really the language of communicating the numbers to the eventual user of the financial model. I'll stop there. I don't know whether I'm preaching to the choir here or there's some additional questions. But for today's session, before we get started, I would really love to get a sense of where everybody is. It's now 3 weeks later, believe it or not. You're supposed to be almost done with your financial model. Let me just put this up here. So if you think about it, the first week, what you're supposed to have covered is gone through the online self-course study, Introduction to FAST Financial Modeling, Data Analysis and Advanced Excel Skills, which is what Kip Korir took us through. Kip Korir is on the call. Then there was a Q&A session. That was the first week. If you move to the second week, then the second week then was about modeling your depreciation, fixed assets, and so forth. Then you had the webinar session, which was the importance of financial modeling standards, which was you're taken through by Stephen Ogada. And also we had Simon Kimali, who was part of that. And then there was a Q&A session that was held last week on Thursday, just to check where things are. So I know a number of you indicated that you'd be having a catch-up week. And so come Tuesday of this week, you should have caught up with your own content. And of course, you're also working on your own financial model. And so we're already here where we're talking about modeling equity, working capital, etc. And of course, the session today is ratio analysis, return analysis, sensitivity scenario, foreign currency translation. I mean, all this stuff that we're supposed to be talking about. So if you'd allow me, I'd like to just go through, everyone who's on the call, almost one by one, and just get a sense of where you're at, whether you have any questions from any of the content that has been covered before. I'll try to respond to anything that comes up. So that then, as we're sort of like going through this, because we're going to jump a bit, assuming you've not finished your model, because the idea is that you should have finished balancing your financial model by this time. So that then, as we get into this ratio analysis, sensitivity, scenario, and so forth, we can then be able to build on top of that, right? And that's why sort of like I want to just make sure I know where everybody is. So as we're moving across, then you feel comfortable. At least I'm able to address things at the right level. Leanne, thanks for posting the link there. So allow me just to very quickly go through the different people one by one. Today you get the opportunity to speak. So I am there's no order here. It's just really how you appear on my screen. So the first person I'd like to talk to is Mr. Collins Mwangi. And I have, I guess, 3 questions for you. Number one, how are things so far? Number 2 is where are you in your financial model? And number 3 is the training itself. And number 3 is, do you have any questions or queries before we get started? So Collins, it's your time.
Hi, Steve. Could you circle back to me? I'm a bit in a noisy place. Be out in like 5 minutes.
No problem, Collins. Okay, then I'll just jump straight to Noni.
Hi. Yeah, no, I'm making good progress. I think I shared last week that I was struggling a little bit with the shortcuts because I'm on a Mac. But making good progress, no questions. Looking forward to today's session. I think this is the one that I've been stuck on quite a lot.
Okay, cool. Thanks, Noni. And if you're having challenges with we do have Mac specific shortcuts, and they work just as well as they work on a Windows machine.
Oh, that'd be very helpful, please.
Okay, so maybe what you can do is just schedule a couple of minutes with Kelvin, who's on the call. He's probably just direct message you, and you can do that installation, and that should sort you out immediately.
Thank you.
Okay, Ezekiel?
Stephen?
Hi, how are you doing?
All right. Yeah, well, I'm progressing well. Currently, I'm under operating costs, but to this point at the moment, I'm still comfortable with it.
Okay, you said you're at operating costs.
Yes.
Okay, you don't need to pick up pace because in another sort of like week we'll be getting towards the valuation and so forth, and it helps a lot if you've already caught up to that space. Okay, thanks, Ezekiel. Nicholas at all?
Good morning, Steve.
Good morning.
The training is moving on well. I just finished the finance course, so I'm progressing to tax. Let's say later on today, like in the afternoon, I might try something to do tax then. But hope by let's say by next week, I should be done with the whole.
Okay, cool. Any questions so far?
So far, no questions. The videos that you uploaded are informative and easy to monitor through so far.
Okay, thank you, Nicholas. Bianca, I don't know whether you want to say hello. I don't know whether you've been taking the course yourself or you're. Hi, Bianca. Okay, Bianca, you're on mute just in case you're speaking. Okay, go ahead.
Hi. I haven't been taking the course myself, but I'm just here to follow up and see how everyone else is doing.
Okay, cool. Thanks, Bianca. I'll move to Mr. I don't know, not Mr. or Miss or Mrs. AN, whoever AN is.
That's me. Anne, can you hear me?
Yes, Anne.
Yeah, sorry. I don't have proper audio equipment today. So far so good. Lagging a little bit. I was on travel last week, but I'm trying to catch up. I think in the next few days I should be all caught up.
Any
Thanks.
questions?
I think I'll reach out separately.
Okay.
Yeah. Thanks.
Cool. Thank you. Lillian Canyon.
Hi everyone.
Hello, Lillian.
Yeah, I'm also progressing quite well. I'm finding the material online very helpful. I'm still having a bit of issue understanding the model itself, but so far so good. Thank you.
Thank you, Lillian. And of course, as always, if you have any questions, feel free to reach out to us, either in the QA sessions, or if you need to organize a quick 15-minute chat, Kelvin is always on call. Nyakio Ruth.
Hi everyone. So from my side, I'm quite behind. I joined last week, I think 1 week late. So I've been going through the platform to just catch up and watching the videos. I think I have a session this week with one of you to take me through on the requirements for, I think, the financial modeling. But yeah, I think by the end of this week I should be okay.
Okay. Yeah, you do need to put in. I mean, as you can see on the screen, there's quite a number of hours that you need to allocate in a given week, just to make sure that you're keeping you're keeping up with us. But even if you fall behind, the beauty that you have the content you can go through it at your own time. But especially for the live sessions, it helps a lot if you've gone through the online content and you try to build on your side. So that then, as we're coming to the live sessions, then those are value adding to you also. But welcome, and I'm sure you, once you have this session with Kelvin, you should be able to move a bit faster. Okay, I'm going to move to Parag Peter.
Hi, good morning, team. Hello.
Yes, we were just asking where you've reached on your model, whether there's any questions that you'd like to be answered.
Oh, so far, Stephen, I've not made any headway yet. I'm yet to choose between the three case studies that have been given. Specifically, the fintech. I had a 30 minutes call with Kelvin last week regarding some areas where I need clarification or understanding. Making connectivity to the videos online. You know, videos online are recorded, so I don't know, 2017, 2015. So it is always good to have a live presentation of the course so that you can ask questions and you do one modeling as an example so that people can pick it up. From the beginning, I think I myself has just said, I've never done model before, besides the one I have seen on the how do you call it, CFI modeling method for the CFI. It's quite different from the first one because the CFI seemed to be very simple and straightforward. So to be very honest, I have not started any modeling on the three case studies. Number one, for the school, you could see it is being paid quarterly. So it is a challenge to model whether that is jump the other 3 months and then you start the other 3 months. The video is not clear on that. Number two, for the fintech, you don't know whether the data given on the fintech are for which particular year, whether they are for 2018, 2014, or 20, you don't know. So that you start modeling from that year. For the hospital is straightforward. That is very similar to what is on the video line. So that is, but sometimes someone need a challenge just to start with something a little bit harder and then also in line with realities of the ground. So the fintech is more challenging and it's good. And then the one for the hospital is straightforward. You can just finish, I think, within a week or something if you follow video. So my question is, the course should have a live sense of interaction between the participant and the facilitators, so that you give one model example, so that you go bit by bit. For example, if you cannot connect between the input C, input S, and then the fins actual, you don't know why are these three sheets, how are they connected, and how they are going to help you do the modeling for the forecast period. So that's how it is. Yeah, sure.
Okay. Thanks for the feedback taken positively. I think a couple of things. There are indeed connection points, and this is one of the connection points when you have these live classes. And I don't know whether you've been attending the Q&A sessions every week at the end of the week, whether it's Thursday or Friday. We have a Q&A session that is for 30 minutes, where you get to ask any question that you have, and those then are responded live during that session. On top of that, you can be able to schedule a 15, 30-minute call with Kelvin, who's the analyst also that we're working on this call, to ask any specific questions that you have. I don't know whether you've been able to take any of those options to support you in terms of addressing the concerns that you have.
Yeah, as I mentioned, I had a 30 minutes call with Kelvin last week, and I'm looking forward to also have some other coaching minutes with him within this week, just to see where I can get clarification and where he can assist me. In the end of the day, modeling, in the end of the course, it should be sure that all the participants can do a simple modeling. you'd start from simple to the complex one, and that should be the bottom line. So it should not come out like it is a classroom or exam thing. It's not a class. It is a course related to our daily work that we do in our work in the offices. So I'll have 30 minutes call with Kelvin as usual, and it's very kind of him that he also set time to take me through.
Okay, cool. Let's let's also just use the Q&A sessions. We'll try and make sure that we're able to address any concerns that you have, and I guess the questions that you've asked about the case study, we can share some clarifications after these, just so that it's crystal clear how those have been structured and how you can be able to run with them, and especially some of the concerns you've raised. But thank you, Peter, for that point of feedback.
Sure, thanks.
Okay, Monglina. Molina, I don't know how to pronounce the name, sorry. I hope I've not massacred your name.
It's okay. It's Molina. It should have an apostrophe somewhere. Yeah, I'm also lagging behind a bit, but I'll be caught up before, I think, Friday, because I'm starting today. Then by Friday, I should be done. For the case study, I chose the fintech one, so I'm looking forward to doing the actual modeling later this week. Thank you.
Okay, thank you very much. Alvin Twase. Yes, Alvin.
On my end, I don't know if I'm lagging behind, but I've been doing the online training sessions, and I've been doing them in tandem with my own Excel sheet and trying to build a model as I follow the sessions. So far so good. I'm yet started on my own scenario, the one I'm supposed to choose, my own case. I'm not yet started, but I hope to start it as soon as I finish the content. Yeah, that's it from my end.
Okay. Thank you, Alvin. And good to hear that you're keeping up, at least at the moment. Last but not least, Raphael. Raphael Kawisafi. Okay, Raphael, if you're speaking on mute. Okay, you're connecting to. Okay, go ahead, Raphael. Should be able to speak now.
Hi. Sorry, hi.
Hi.
Can you hear me?
Yes, we can now.
Yes, so I mean, all good on my end, working on the model, working on the fintech option. Yeah, no problem so far. I hope to finalize by midweek or Thursday. Yeah.
Brilliant. Thank you, Raphael. And maybe just two thoughts. Sorry, I see Ogada is also on the call. Ogada, do you want to say anything? Or you're good? Ogada was during yesterday's, last week's session.
Good morning, everyone. No, I don't have anything to add. Just wishing everyone the very best in this session, and I do hope that each one of you will commit time to it, because then it's only beneficial when you apply yourself. Yeah, that's it for me.
Thanks, Ogada. I appreciate it. And thank you for joining us. Yeah, so for me, a couple of thoughts from me. One is, and I hope we can do this, Leanne stroke Kelvin, for all the guys who are doing, all the people who are doing one case study, assuming it's a hospital, it's a fintech, it's a school. Maybe we can have some clusters and have some coaching sessions together, as we've done in the previous cohorts, so that then also people can see who else is working on that. They can be able to connect with each other, because networking is also one of the other aspects that we want to get out of this, so that you can either ask us, you can also ask some of the people who are participating and sort of like exchange ideas. I think that would be very useful, so that you don't feel as if you're going through this by yourself, that you can ask specific questions and those you can get some responses to. I think that's one. Number two is, please take advantage of the coaching sessions. I think, Peter, to your point, we don't want this to be a classroom effort where an online session where you just go and you do your own thing and you come back at the end, you're sort of like going through the online content. We want it to be very deliberate that you're getting actually more value than someone who would attend an in-class session. Because in the in-class session, what happens is that you sit there for 3 days and all you do is the case study that you're working on live, right? And then after that, it's done. However, with these, there's what you're working on online, there's the additional case study, there's a Q&A sessions, there's the coaching aspect that we want you to be able to take advantage of. So that then, by the time you're done, as you rightly put it, you're able to build a financial model. And not only the one in the case study, because we've had some feedback at times for the live sessions. People feel as though, yes, I know how to build that model that you worked on, but I don't know how to build any other financial model. And so that's why we're very clear that you need to work on the additional case study and get some guidance through that. So please, the point is take advantage of the additional coaching sessions. Please make sure that you're building the extra financial model so that you don't finish saying, okay, I've seen how you can build this type of model. And that's why Barak and I say that the other model is a quarterly financial model. Of course, it has a different challenge to it, but it's not that challenging once you get down to it, and we're happy to support in terms of making that come alive. I think for me, that was the second point, just to make sure that you build the additional financial model and you realize actually we are open to be able to answer any questions, to provide short stints where we can be able to, coach on specific things where there's 5 questions to say, okay, these are questions I'm facing. Can we sit down? Can we be able to interpret that? But I also had you in terms of the interconnection between the different sheets, and probably I'll try and just speak about that in a second. Okay, cool. Assuming there's no other comments, I'll just jump onto the session I'm moderating today. And so let me go back to the slides for a second. So in terms of how this is structured, let me just mention names. In terms of how this is structured, there's a few things I want us to just go through. So we've reviewed any issues that you have. I want to speak a bit about ratio analysis. The file you received has already been completed, so to say, but it's been completed to the point where the balance sheet is balancing, which is where you should be able to get to, if you should have gotten to if you had gone through the content till today's session. And then I'm going to speak about financial statement translation. And then I want to jump after that to scenario analysis, which I think we spent a bit of time on, and sensitivity analysis. We spent a bit of time on these in the content. Maybe not sensitivity, because sensitivity is going to be coming once we do the evaluation, but I want to just spend a bit of time on that. But the first two, at least, there's a few points that I want to just point out to you. Okay, so I will move straight to my spreadsheet. So let me stop sharing here. Jump to spreadsheet. And it's a sheet that you already have. That's what I'm going to be using. Making sure that my macros are working. They are working. So of course you have this sheet that you've already received in this case, and I don't want to belabor the point, but let me just mention a few things. And I guess it's the point that Peter you asked, and I just feel like just emphasizing this. On one point, you have the financial statement actuals, which are just the actual financial statement. This is what you'd always start your financial model with, to a certain extent, where you say, give me the last 3-year audited financial statements or 2-year audited financial statements. And once you get those, then you would key them in, right? You'd key them in based on how the audited financial statements have been developed in this case. And then you'd be able to get to the point where you have your financial statements, right? And these are the historical ones. And it's from the historical ones that then you'd start generating a bit of the assumptions. Maybe you'll be given some guidance, in this case by the company, in terms of what the expectations are. Expectations in terms of if it's financing, do they have any debt? How are they going to be financing their growth? In this case, they'll give you some assumptions around that. They'll give you some assumptions, or you may have to create your own set of assumptions in terms of how they expect to forecast. And these are the input S, sorry. I mean, this back here. And the input S, you'd be given assumptions in terms of the local sales growth rate, export sales growth rates, etc., right? And these are the things that then you're using to be able to make your forecast into the financial model going forward, right? And so just to always remember that the link then is that these items, the historicals you get from the audited financial statements or management accounts that the company gives you, the input C, input S is the assumptions that you're going to either generate as yourself, that you'll have to cross-check with the company, or the company will provide to you, and then you'll build it out. But always remember this, as a modeler, your work is not to regurgitate what the company tells you, right? Whether you work for the company or you work externally, one of the expectations that everyone has for you, in you as a financial modeler, is to help them to make the right decision, right? Most people, they know what they want to achieve. They know, they have a gut feel at times that it's going to make sense. So I don't know, it's an entrepreneur, this kind of situation where they want to value a company. They have a gut feel that the value of the company is, I don't know, 10 billion. Let's use dollars here. It's, I don't know, $10 million or $50 million, right? But they can't prove it, right? And so when you do the valuation, the answer is not for you to confirm that actually it is $10 million or $100 million, whatever the figure is to come back and say, actually, the number that you found is $7 million. And the reason for that is 1, 2, 3. And then it's for them now to start thinking, okay, why is the number different from what it should be? When you're building a financial model, there's no predetermined output you should have. Yeah, that's such an important thing to just mention. There's no predetermined output you should have. The output should be what the assumptions are informing in terms of the output, right? So I always say, as a financial model, to a certain extent, you need to be a bit dispassionate about the result that the financial model present to you. If you're looking for an IRR for a project, you're dispassionate. Whether the IRR is 50% or it is negative 10%, to a certain extent, it doesn't matter to you as a model, at least at the base case when you're building the financial model, right? Your work is to make sure you've captured the assumptions as correctly as possible. You've captured any inputs that you've been given. You've done your calculations correctly so that you're able to get to whatever the IRR is. And then that's a piece of information. And if you remember in the whole idea where we had the conceptual model discussion, right? And we had the Excel world and we had the real world, right? Then based on the output from the financial model, you can then inform the different parties on the other side and say, okay, you know what? The IRR for this project based on these inputs is 5%. And they'll say 5% is too low. Are you sure the model is working well? If you've built it well, you can say, yes, I am sure it's working well because we've built it well, we've reviewed the financial model, and it does make sense, right? So then the key question is, why is it 5%, and what can we do to be able to change it, right? And so, and I'm talking about this because I've seen these kind of situations where at times financial models have a bias that the numbers, the IRR should be at least 15 or 20%. The IRR should not be anything, it should be what it is, right? We're helping to make decisions at the end of the day. Sorry, I took a tangent there a bit, but very important point for me just to communicate, because at times you find analysts, you think that the valuation should be at this figure, or it should not be at any point. It should be where it is based on the assumptions, based on how the company is where to grow. And your only real work as a modeler is to help people to make that right decision by challenging, by saying, okay, they say, okay, then in that case, if the number is too low, the valuation is too low, let's increase the sales to this point. You say, okay, brilliant, we can increase the sales, but that means that you have to think about your production, right? So you need to buy a production plant or to install a new production plant. And then you need to think about the financing, then you need to think about the working capital, then you need to think about the cost that you'll incur around that, right? That you're able to get people in a sequential, rational kind of way to make the right kinds of decisions. Okay, let me stop belaboring the point. So you have then those sheets, which are the inputs, your calculation sheets, which is what we've been building in the online content, op cost, op rev, etc, till the working capital. And of course, hopefully, if you've done all these things properly, you'll end up with your financial statements where you've been putting all your forecast numbers here. And as you're putting your forecast numbers, the first check is the balance sheet balancing. That's the first check, right? And very important to say that the fact that the balance sheet balances doesn't mean that the model is the best model ever created, that it's the right model. It just means that you followed accounting rules, which at least you should have done. You should have done when you're building a financial model. You followed accounting rules. That's the first thing. So if it's not balancing, It means that you not follow accounting rules. And before you start doing anything else, you should go back to the different inputs to ensure that you follow the right accounting rules, because you can't use a model that has not followed the right accounting rules to make any interpretation, because then you don't know what the issue could be. It could be that, yes, you've not followed the accounting rules. It could be you've transposed certain numbers. It could be many things. So if the model is not balancing, the first thing is to balance it before you can move to other things. But assuming it's balancing, then you end up in this position where now you can say that I have a balancing financial model. So now I can start adding value to the financial model, to the project, to the company, etc. And often the first point of call is the ratio analysis, where now you can spend a bit of time doing a bit of ratio analysis to figure out how the company is performing in this case. And not to spend a bit of time that, and I won't do the typical ratio analysis of the, because that you can do in the course, where you say, let's focus on leverage ratios, on growth ratios, focus on working capital ratios and so forth. I don't want to do that. I want to focus on something called common size financial statements, which I think is extremely powerful. And it's something we use internally to add value to financial models once we have a full set of financials. And common size financial statements, you can even use them on historical financials. They don't have to be used only on focused financials. And maybe I should just ask in the room, I don't want to be preaching today. Has anybody used common size financial statements, and what's been their experience? How do they use them? Anyone in the room, feel free to put up your hand and just unmute and just speak to these. Common size financial statements. I know for the guys who are taking CFA, you probably have gone through that in part of the content. Raphael, have you come across common size financials? Raphael, you're mute just in case you're speaking. Okay, Raphael seems not to be there. I don't know, Lillian Kanywa?
Yes, hello?
Yeah, go ahead.
Yeah, now I think maybe it is the language or the naming of it coming called common size financial statement. But in a CFA financial reporting course, most of the time they don't use the absolute figures, but they use the percentage of the figures to present the statement to the shareholders. So you find that sales or leverage debt to equity is presented in terms of percentage instead of the absolute figures. So they're using ratios instead of the absolute figures, maybe US dollar anything.
Okay, cool. Thanks, and I think you're partly there. I mean, common size financial statement, it's really just a representation of your financial statements in percentages, right? Where the first thing is your statement of comprehensive income is presented as a percentage of the total revenue, right? So everything is presented as a percentage of your total revenue. Your balance sheet items are represented as a percentage of the total assets or the total liabilities and equity, right? Equity and liabilities. And your cash flow statement is again represented as a percentage of the total sales for the specific year. Now, it's a very powerful tool to, first of all, just understand the financials. And you'll see this in a second. But then it's also very powerful from the perspective of figuring out when there's any significant changes in the financial statements that you can't be able to tell with your bare eyes when you're looking at absolute numbers, right? So assuming, I don't know, the margins, the EBITDA margin, or maybe the cost, the cost of sales margin in this case, has moved from 50% to 60%. That's not something you'll pick out very easily when you're looking at the financials. But when you put this in a common size financials, you can be able to see that change quite stark. You'll see it there. It just pops up really well. That's the second way that I find it. And then the other way is at times when you want to isolate certain aspects, right? When you want to isolate certain aspects, so you can use conditional formatting and say, you know what, I want to see any items which are above 5% of the sales. yeah, because probably those things are going to be material for your financial model. Or I want to see any items which are at least 50%. And I find that very powerful in this case, and we're going to do that in a second. So let's jump in to this in terms of our common size financial statements. I like having the conceptual thought of what I'm going to be doing before I build, I jump to the conceptual phase. And I think this is something we really emphasize on this course, that often don't just jump into Excel. Ask yourself, what do I want to do? What steps do I want to follow? Type it down, write it down, and then now go to Excel. And you'll find that then it's very easy to be able to do that. Right. And so, as indicated, with our common size financial statements, we're going to be creating a new set of financial statements, which are going to be based on percentages. So the first step, let me just write here, common size. And I hope you can still see my screen. Step number one of our common size financial statement is going to be create a new sheet of the FinStat sheet. Yeah, so we're going to take the FinStat sheet. We're going to create a copy of a new sheet, and this sheet we're going to call now common size financial statement, common size financial statements, right? So we'll create that sheet. That's the first thing. Once we're done creating that sheet for the common size financial statements, we're going to, of course, clear we're going to clear the content into that, because we need to add the percentages into that, right? And once we clear the content of that, now we can start doing our percentages in this case. And so for the statement of comprehensive income, or the P&L statement, let me just write the P&L statement for the P&L. Carry out size based on total sales in the period. And then we can say that for the cash flow, it's going to be the same thing. Just say for the cash flow, and then lastly for the balance sheet. Sorry. Common size based on the total assets. In the period, right? Now, something very important when you're doing common size financial statements is always to remember to anchor, right? So for all these three items, we need to remember to anchor properly. Yeah, we need to remember to anchor properly. That's very important for the three sets of financials. And then once we're done with these, we can now apply a few things here. We can do a bit of conditional formatting, etc., just to sort of like bring out a bit more analysis around this. Of course, we'll create some averages also for each of the ratios, just to see how those averages look like in this case. So that's what we want to do. Those are the steps. And so with that in mind, it's very easy for us now to go and do it and remember that then what we're going to be doing specifically for each of the different items. I really urge you to do this before you move to building any part of your financial model. Okay, if there's any questions, please put up your hand. Feel free to type in the chat. I'll pick that up, or Diane will pick it up, and then I'll be able to respond to that. So the first thing I'm going to go to my FinStat sheet in this case, and there we have our FinStat. And I'm going to create a copy. Of course, as we've been doing in the course, you can just right click, you say move or copy, you can say create a copy. That's a long hand way of doing it. I'm going to put it before this sheet called before this sheet one that I just created. Just to all, yeah, I'll just call these steps of conceptual model. Call that conceptual model. Then I'm gonna come here. I'll rename this tab quickly, and I want us to do this together. So I'll keep pausing a bit just to see if you can build this together. So feel free to do this as we are moving along together, right? And just rename this, call this common size common size FS, financial statements in this case. And there I have my common size financial statements, which I'm now going to start making some changes on, right? I'll change the tab color of this. Let's do this as a calculation sheet, not as a presentation sheet. I don't think it's one that we want to present, so I'll just use it as a calculation sheet. So call that light. This color, I'm always losing it. Still off, but we can use that one for now. Okay. I hope you're together so far. If we're then there, the next thing I want to do is that these percentages that we have here, and we have the Kenya shillings 1,000, are going to be changed to percentages. So I'm going to select that whole line, and I want to remove the percentages in these and put percentages, because each of these is going to be a percentage. And so what I could do is just to copy these, maybe just to make my work easy, Control C. I'm always trying to look for easy ways of doing things. I press Control H, and then I'm going to say, look for the Kenya shillings 1,000, and I'm going to replace that with the percentage sign, and I click on replace, and it says, well done, we have made 54 replacements, close. Let me refresh. There's some which have not changed here, which I think is because they have the name of the currency, so that we can just change here very quickly. It's called SMU. Remember, at some point in the course, and correct me if I'm wrong here, we did create a name for the currency itself, which we called is equal SMU, and so that's why this has not changed, because it has a name, right? And so then I'll just change that, just paste that through, and make any other places where we have these. I'll do the same thing. This is because it's linked to the top, to the EBITDA, so that I've just I didn't have to change. Again, the same thing. We go down all the way to make sure that it's accurate. So we have the percentages in this case, right? Now, of course, now we have the rest of the sheet here. And here I can just choose to delete all these items. So I don't need them for now. This is what I mentioned about clearing. So that then I'm able to create the common size. So I'll press Control Shift and the down arrow all the way to the net profit and to the right. And I can just click on delete for that. And as you saw, some numbers were in blue, some numbers were in black. So I know that from a formatting perspective, some numbers will come out in blue, some in black. So I'll use Control Shift B, which will make sure that any format, any numbers that I input here are now going to be in black. They will not be in different colors. And then I can just refresh that. Of course, it tells me I have a check here because my balance sheet is not balancing. I'll come to that in a second. And that's because I've deleted a number of things here. So that will check it in a second. So let me delete these items also all the way till the end. So again, Control Shift B. And I could even format this as a percentage, maybe just to make my work easy. Control Shift P, because they're going to be percentages. Once I'm done, all these are going to be percentages. So I could format these as a percentage to make sure that I don't have to keep doing that. Control Shift P. All numbers are supposed to be percentages once I'm done with them. Again, I'll do the same thing here for the balance sheet. Select all the way down. So I'll just do it till there and to the right. Delete. Control Shift B. Control Shift P to format as a percentage. I hope you're together so far. The check has gone back to 0 because at the moment, and actually it doesn't matter because I've deleted the numbers. But then I'll come to the cash flow statement and I'll do the same thing that I did a moment ago. Just select from this point all the way down to my cash flow statement and to the right, Control Shift right arrow, delete, Control Shift B, Control Shift P. Control Shift P makes sure that as I'm working on these bits, they'll just format as percentages directly. I won't have to format them as a percentage. So let me pause there for a second. Any questions? Have I lost anybody so far? I've just now I've renamed the sheet, so I'm now ready to start making my computation. Any questions? Any comment? Anyone who feels I've moved too fast? Okay. I don't see any questions or any comments in the chat and so forth, so I'll keep going. Then I'll come to my local sales, and I mentioned most important thing is to remember that I need to anchor properly, right? So if you look at the conceptual model here, I say the first thing is create a sheet, clear the content, then I do the P&L, and I remember to anchor properly. Then I do the balance sheet, the cash flow, then I can get to the conditional formattings and so forth. So let me do exactly that. I'll go to the local sales, I say is equals to, and I go to the financial statements. And remember, I'm starting in the historical period. I mean, the local sales, the 6 billion shillings in this case, divided by, and I have my 10 billion in this case in revenues. And this is what I need to anchor properly. So I'm going to press F4 in this case. And in this case, it means I'm anchoring the cell. I'll press F4 once more to make sure that now I'm the dollar sign comes before row number 11. So it means I'm anchoring the row. And that's what I want. I don't want to anchor the column. I want to anchor the row. So I've anchored the row now because the dollar sign is before the row number 11. And I click enter, and then I have my 58.84%. Right. And so on that basis, I can just copy this formula, and now I can apply it to the entire P&L statement, right? So I can just select it as it is, then I select all the way downwards. I select all the way downwards, and I select to the right, but only during the forecast period. And I'm going to do a paste special, where I'm going to be pasting special the formula only. And the reason I want to do the formula only is so that I can retain the formatting on the specific cells, which is there already. I don't want to reformat this. Yeah. So to do that, I'll press Alt H V, and then I'll press F for formulas, right? And I know this because I use it quite a bit. Alt H VF. I think it's something we mentioned in the course already, that you can internalize the sequence in this case of different shortcuts. Alt H V is a paste special. Then you can decide whether you want to space special values. Then you press V again. Paste special formulas, which is F. If you want to paste special the formatting, it's K. So forth. That's something I've internalized because I use that quite often, right? If you want to trace dependence for arrows, you can press Alt M, which is trace dependence, then P. You can decide how you want to trace the arrows in this case. But anyway, I'm just saying you can also just create your own shortcuts by using the Alt bit, where you just press one after the other, not together. Alt H B F in this case. I'm going to refresh that. I'm on manual calculation mode. So I press F9, and I now get my numbers here. Some of them are in negative, some of them are in positive. Yeah. There's people who don't like seeing the common size financial statements in negative form because they're just like, it's not telling them anything. There's people who are okay seeing it, some of the numbers in negative, because then they can tell these are negative items, the expenses in this case. So it depends on your preference in this case. There's no right way of doing it. If you feel that you want to see all the numbers in positive, then you can use the absolute function. And then on that basis, you can see all the numbers then looking positive in this case, or you can leave it as it is, where then you have the numbers, some of the numbers in negative as a percentage in this case. And if you think about that, then I can copy one of these formulas, because the same formula I'm going to be using for my cash flow statement. Yeah? So I could decide to even just copy this rather than going on. And then I'm going to pause. I'm going to pause right after this, and I can drop it here, Alt H V F. I can just paste it directly, actually, Control V, because it's a formula and it's been linked properly. Yeah. Let me format this row total, Control Shift P. Of course, it's showing totals in this case. I don't need totals here. What I would like to have is to have an average, which is what I'm going to apply in a second. But then again, let me just pause for a second here and see if there's a comment, there's a question. There's someone who's following through and is saying, please stop, you're moving too fast. And I'm gonna pick on people here just to see whether we're together and if they need me to slow down a bit. Nyakeo. Nyakeo Ruth.
Oh, okay.
There's only one Nyakeo.
Oh, okay.
But just to be sure, Nyakeo Ruth.
Okay. I am following. No questions yet.
Okay. Have you ever used a common size financial statement?
No, this is the first time.
Okay, cool.
Mm.
Are you building as we're moving, or you're watching
No,
as a
no, no.
Netflix show?
For me, I'm just watching and taking notes.
Okay, cool. Please don't make this a Netflix show. Thanks, Jakeo. I'm gonna jump to I don't know. Last time I tried speaking to Raphael, he was quiet. So Raphael, are you back? Raphael, are you there?
Yes, I'm back. I'm following. All good on my end. No questions yet.
Okay. Are you building or you're watching?
No, I'm building as well. I'm going with you.
Okay, thank you. Cool. Parag, let me check on you. Parag, are you good?
Yeah, I'm enjoying the ride. I'm watching.
Okay. You're watching, not building?
Yes.
Okay, make sure you have some popcorn.
Sure.
Okay,
right,
cool. We'll keep going.
Just a quick one, sorry. So I'm building, but I still don't have the shortcuts. So I wonder if when you are saying the shortcut, maybe you could also not say the shortcut, if that makes sense. Just because I don't have it, and so I'm having to go really slowly, and then I'm catching up. Thanks.
Okay. Cool. We'll install the shortcuts for you right after this. I'm sorry that you don't have those.
No
but
worries.
actually, you could do all these without using shortcuts, right?
Yeah,
maybe.
exactly. So I have, but I'm just going a bit slower than you're talking. But it's okay.
For the next session, I'll just the next sections I'll do them without any shortcuts, like any fast macros, because there's shortcuts in the sense of shortcuts which are in Excel, and then there's fast macros. So I won't use fast macros for the next section. Okay, but this starts telling us something. In this case, it starts telling us a few things when you look at these financials, and I'm gonna choose just to go the absolute way, where I'll keep all the numbers as positive, and the reason for that is when I want to use conditional formatting and say, show me all numbers which are greater than 5% or greater than 10%, if I have negative numbers, they're not going to work, right? The costs are not going to work in this case, right? So I am going to use the absolute function here. So allow me just to come here and change my formula here. So I've gone back to the beginning where I had the formula, and I'm just going to introduce the absolute function at the beginning. The absolute function, you just type ABS, open brackets, and you close the brackets. There's really nothing else to it. It's just that. Right, and now I am going to copy that formula, Control C, select all the way till the end, all the way down. And this is not a fast macro, it's just an Excel shortcut. And that says Alt H V F, right? That pays special the formulas only. And now all my numbers are in positive version. And as I indicated, the reason why I did that is so that when I want to start choosing the conditional formatting, then it makes sense. If someone tells me, show me all the items which are above 5% of my sales, then the marketing cost will be picked in this case, because they're not, otherwise will not be picked. Now I also need to create an average here. So I am going to come here and say it's equals to the average. And I select all the way till the end, J9 to U9. Click enter there, and then I can just do this all the way down, Alt HPF. And the beauty of that is I retain the formatting all the way through, and that's something I like doing.
Stephen, repeat that again.
Yeah, I was saying, let me redo that, Control Z. I don't know which part you want me to repeat, but I'll start from the point where I was doing the average. Is that the point, Sarah?
And under the total column.
Yes.
You are doing something, sure.
So I was saying, if you look at this totals column, before this is an addition, right? It's an addition of all the items to the right. Now, this doesn't tell me anything, and it's not useful for me, especially when I'm looking at percentages. However, if I do it as an average, then it starts telling me something. Whereas if someone told me, okay, what's the average, contribution to sales to the local sales? If I have this number, 52.6%, I say it's around 53%, right? Which is an important number just to have at the back of my mind. if someone tells me, what's I don't know, marketing and distribution cost over the life of the whatever, then I can tell them it's 5% or whatever the figure might be. And so then I'm just doing the average here, which I've just done from J all the way till the end, even into the focus period, till column U, till the focus period. Then once I'm done with that, I've just copied this, and now I'm pasting it all the way down. So I've come down till the total dividends. After copying, right? The first thing is that you select copy, then you select all the way down, then you paste special, Alt-H-V-F, right? And just for someone who's saying, okay, how do I do that if I don't want to do that sequence of shortcuts that you've just used? All you do is just to come to the top, and you go to home, and I hope I remember it. It's at times you know shortcuts really well. You forget how to do it without shortcuts. I come to paste, and then there's space special here for formulas, which is right here at the top. I hope you can see this. I hope you can. Anyway, then I've just done that. I hope you could see that. Leanne, you could see that for it? No, but it's not what I was doing, at least what I was selecting. Okay, it is taking a breather here. F9, yes, there you go. So then I have the averages now, and this now starts telling me something. So the other income is just around 1.6% over the life. The marketing contribution on average around 8.5%, admin cost 8.9, etc all the way. And this starts telling me something about my financial statements, right? I start understanding them in a different way, right? And this is where you can be able even to track any error that there could be in the finance, but more these other bits. So what I'm saying is that I could also now take this percentage of the total sales. Yeah. So it says my internet is unstable. I hope you can still hear me. Kipkorir, can you still hear me well?
Yes, I can hear you now.
Okay, sorry about that, about the internet issue. So what I was saying is that I'm now going to copy this formula on J9, and I want to put in the cash flow statement. So I'll go to J74, and I can just paste it there. Control V is the quick shortcut there. Then I'll just select my full cash flow statement all the way till the end and to the right. And I hope I'd copied already, because you need to copy first so that you can paste special. No, I had not copied. I need to copy it first, Control C, select till the end, and select downwards. And I'm just using my shortcuts in this case. I am not, I try as much as possible to use my mouse unless I have to. So I can paste this special, Alt-H-V-F, once again, Shift F9 will renew that, will refresh the financial model for me. And I can come clear the blanks, because I don't like having these blanks in the middle. So I'll just select the blanks and delete all the way. This where there are no numbers. I know for sure there are no numbers. So I should not have those. So I'm just going to come there and just delete those all the way. And so again, this starts telling me something. Of course, I do need to have this average also here. I'll just come here and say it's equals to the average of the from the beginning of the period from J74 all the way till U74. Click enter, and I can copy these downwards also. Alt-H-V-F, refresh that. Then I'll remove the div 0 errors because there are no averages there. That's why then I'm having that as an error. So I can just delete those ones directly into the financial model. And now, let me also do it for the last number, though I don't think it will have Alt-H-V-F. It will have any impact, 8.53 in this case. And so my numbers are starting to come together in this case. My common size is starting to come together. And I'm going to now talk to the interpretation in a second once we are done with the balance sheet bit. Now, let me pause for a second. I don't know. And I know that there's people who are watching this, and so they want me to just keep going. But there's people who are building who I know are saying, "Could you please stop?" And Noni, are you with us so far?
Yes, I think so. Just scroll down a little bit.
Okay, 1 second. Do that.
Oh yeah, no, I'm totally with you. Okay, thanks.
Okay, brilliant. Okay, then we keep going. So we go to the balance sheet. And I guess, as I mentioned, for the balance sheet, it's going to be as a percentage of the total assets, right? And so I'm going to give maybe a head start to some of the guys who are building as we are moving to just build that out before I do it. So I'm going to give you a 1 minute head start as I see if there's someone who has a comment or a question. Let me just speak on someone who's not spoken today, or at least who's not spoken. Maybe Ezekiel. How are you doing, Ezekiel?
Yes, hi, Stephen.
Hi, how are you?
I'm all right.
You're building or you're watching?
I'm not building. I'm just taking notes. Perhaps I can inquire on something. If you kindly go back up to where EBITDA is.
Okay, let me do that.
Yes.
I'm minimizing. I have one screen today, so it's EBITDA is here on this line.
Okay, all right. I'd seen some, the sign that comes when you're doing a formula, that green sign that comes up on a cell. Could you explain what could be the issue?
The green sign that comes up on the cell.
On a cell, yes.
Which part?
I think you have refreshed. Just kindly go down a little bit. I'd seen maybe you refreshed it, huh?
Mm-hmm.
I was seeing some when you look on a cell,
mm-hmm.
on the top left of a cell, it shows a sign, a green sign. Yes. Does it come in
top left over here?
The
top left at the top here.
Top left, on a cell, yes.
Okay.
Top left, not right. Sorry, left.
Yeah, or left.
On left. Normally, it shows us a green sign. Okay, before you refreshed it earlier. Does that one pick of saying that the formula was not correct or something, or there's a change in formula?
I don't know what you're referring to, but usually when I've seen that is when you're trying to copy something across, and it's asking you which direction you should copy it from, right? Whether you should be copying a formula from the top or copying it from the left. That's what I have seen. But let's keep moving. If you see it again, just stop me. Just say stop.
Right.
Shout stop.
That's fine.
And then,
all right.
I will also be on the lookout for that.
All right. Thanks.
Okay, brilliant. So let me do the balance sheet. So let me do the balance sheet quickly here. So again, I'm going to do the same thing is equals to, and I'm going to pick J. Remember what you said? We're going to be going to the financial statements and picking the same cell, which is J34, divided by the total assets, which is going to be J43. I'll go to my FinStat and go to J34 divided by J43. It should be, and then I need to remember to anchor properly, as I did mention. F4, F4, and I want to anchor the row, not the column, not the cell. I click enter, and since I'd already done my formatting earlier, it comes into a percentage. I'm going to apply the absolute function at the beginning, because every so often you could have a set of financials where the retained earnings have gone to negative, right? So I'm just going to put that as an absolute, copy that, Control C, and then I am going to select the full set of the financials, till then and current liabilities, and the equity. I'll delete the sections which I should not be having. Select this till there, Alt H, VF, paste that, Shift F9 for me to refresh. I know there's a number of people who are not convinced about using the manual calculations mode. And I always say, if you've not been using it, please use it with care. I've had situations where before I got used to it, I was making a presentation on a financial model. and we make some changes in the financial model. The changes don't update onto the financial model, and I do everything. I restart the Excel, etc. We're in a meeting. I tell people, there's a problem with my Excel, etc. Only for me after the end of the meeting to remember, oh, did you refresh? I did not refresh, and then to almost feel, I wish I knew, right? So I always use with care. Use with care. It can be a bit frustrating, but for me, it's now second nature. And I like that a lot because it gives me a certain level of control on the financial model. Let me just do the averages here. Is equals average. In fact, I could copy the average from up here. I don't have to redo the formula. And that's also part of the beauty of FAST, I think. It's the idea of just reusing calculations as often as you can. And I like that idea quite a bit. It reduces the amount of errors you have. It makes your modeling quite fast. If someone was telling me to rebuild this financial model from scratch, I don't know how long it would take. Maybe we should have a record in the office of sort of like rebuilding the MAT financial model, but I can bet it would not take me, I would say probably 2 hours, 3 hours, I should be done. So I know some of our new analysts could do this much faster because they do this every single day. Lillian, you have a question. Let me allow you to ask your question before I start making explanations. Shoot, Lillian.
So hi, Steven.
Hi.
So in my statement of comprehensive income, my first percentage is actually 50%.
Okay. Here at the top, you're saying it's 50%.
Yeah.
You need to check the formula. So you should be reading J9 divided by J11, FinStat. Is that the formula you have?
Let me see. No.
Yeah, so and maybe
okay.
if we just Alt MP, if I just go back to the arrow, this is what I was saying. It says that it should be a J9 divided by J11. If I yeah, so those are the formula that I should be using here. So that might be the issue. That might be the issue.
Oh, it is. Thank you so much.
Okay, cool. Alt MAA to remove the arrows, and we're good to go. So we have now the full set of the common size financials. As I mentioned, the P&L divided by the total sales, the balance sheet divided by the total assets, and the statement of cash flows divided by the total sales also. Now, I'm saying that this is a very powerful tool when you're trying to review your financials, just to have a bit of a sense, right? So one of the areas that I spend a bit of time on is just checking here, between 2014, 2015, between the pre-focus and focus period to see what are the key changes here. So this says that the local sales used to be 55%, they've gone down to 50%. The export sales were 44%, they've gone down up by 49%. So there's something, right? And this is not something, if I was looking at this financial statement and just looking at the same period to sort of like analyze that, between 10 and 12 billion, 8 and 12, it doesn't tell me anything, right? I'd just be like, okay, that sounds interesting, that looks interesting. Probably I'd say these numbers look like they've come closer a bit. But when I look at the common size financial statements, I can see it clearly that actually what we're saying is the local sales are reducing, the export sales are going to be increasing over a period of time, which is an important point. Our margins are remaining the same at 53%. Other income is negligible, no significant change. All these items, no significant changes here. I'm just looking, I'm saying this is moving by a whole 50%. And net finance costs are reducing by 50%. That's interesting just to have at the back of my mind. The P&L, these are the dividends. My margins, net profit margins, they increased by a whole 1% or thereabouts, or 1.5%. That tells me something. And now I can be able to tell those things because I'm looking at percentages, right? If I look at my balance sheet again, I can see what's happening, what the flows are showing me here very easily. I can just see if there's any significant changes here. And I want just to illustrate this. If, for instance, I just by mistake, I don't know, let me imagine that this number was, let me just put 30 million. Yeah. It's very easy for me to catch this as a mistake if I'm using a common size financial statements. And that's why I like you looking at them. If I do Control F9 in this case, and I come here to the top, I'll catch this mistake very easily because it moves from 50 to 69%. Then this one from 49 to 30%. Then it moves down to 51%. I'd be like, there's something wrong about this number. And if I go to my FinStat, truly, I will see that number here. Yeah. Of course, you could argue that this is also a number that you could pick out the other way. But just important just to mention that common size financial statements are useful from that perspective. They're useful from that perspective because then you're able to pick out some of these things very easily. Just do Control Z there, Control Alt F9. That's a first use. The second use is, of course, what I mentioned, conditional formatting, right? And I could say, let me just, and we can do this together. I can just select here, I want to do a conditional formatting. Let me just say conditional formatting. Yeah, this is a hack job, so excuse me. Ideally, I don't do this. I'll just put here a 5% in this case. Pro Shift P and increase this. And here I just want to tell Excel to just check for any numbers which are above the number that I'm going to put here, right? Using this conditional formatting approach. So I could select, maybe let's leave the averages for now. I could select my entire financial model, right, from the beginning, from J9 to the right, all the way below. Yeah, still there. And then I could use the conditional formatting bit, which I think we also discussed. You went through in the first session. Sorry, I'm having to move this bit. Minimize this a bit. Okay, it's okay. I'll have to work with it at the front of my screen somehow. Okay, so let's just redo that. So I'll come here, and then I'll go to Home. I go to Conditional Formatting, and then I'll say New Rule. I click on New Rule. And I hope you can still see my screen. When I go to New Rule, I click on Format Only Cells that contain, right? And I click Cell Value, not between, I say greater than in this case. And rather than putting in a number, I will use the selection function here and select that cell that I just put up with the 5% up here. That is my cell I4. I'll use that as a point I'm going to be using, I4. Then it tells me which format set am I going to be selecting. I select the format I want. You can select whatever you find, whatever you like. For me, I like coding the cell itself. So I'm going to fill the cell with a red color and maybe make sure that the font remains as normal. I mean, it doesn't matter. It could be white in this case if I feel extra special. So like, let me just make sure the font then will be white. I can click OK. So if it's greater than that figure, then it's going to format it from our perspective. Then I click OK, right? And now, as you can tell, anything that is above 5% has been highlighted in this case, and I've just used a conditional formatting. I could decide now to change. The beauty of using this approach of having a cell that then you can edit is precisely what I'm doing here. I could decide, let me use maybe 15%, anything that is above 15%, and I refresh my financial model, and then I see all the items that are above 15%. I could say I want to see anything that is above 50%. I click just my 50% here. I refresh my financial model, and I see the only items which are above 50%, which are driving my financial model in this case, is the cost of sales in this case. If I scroll down, I don't think there's anything else. Okay, the cost and current assets are 50% of the total assets. That's just important for us to have at the back of our mind. If I go to my cash flow, total liabilities are also 50%. Doesn't tell me much in this case. But using this conditional formatting, now I can start getting a bit more value out of the set of financials in this case. Yeah. And really, that's what common size financials are, and that's how you use them. And that's why I like common size financials quite a bit. Yeah. Of course, and this may be an exercise I'll give you just to go and play around with these common size financials before you move to the translation. Is another way you could do the same common size financials, and I urge you to try and do this. It's something we do because you can do any version that you like or that you feel works for you or tries to answer the questions you want. Is that, for instance, if you're doing a set of financials, and maybe you're starting from this is a historical point here. We have here 2014. You could also do a set of common size, which is just taking everything as a percentage from this year, right? Going all the way to the right, right? And what I mean by that, I don't want to do this for you. Let me just do it very quickly here. Just for one of them, I'm going to just delete this. And this will be interesting for you just to tell how the financial statements are growing over a period of time. You know, what is the margin which has been applied? And this I'm just giving as an exercise, just in case you want to do this. Assume that my pivotal year is 2014. That's the last focus. That's the last historical period. So I say that I want to do a set of common size, which is as a factor of 2014, right? So I come here and I say that what I'm going to be doing is going to my FinStat, and I select the figure as that 2014 divided by that figure as a 2014. But then I'm going to anchor in this case, and I'm going to anchor in this case the row, right? And not the row, the column rather. So that I can move this to the right, I can move it to the left. Yeah, I'm running a bit faster here. Let's see. Let me come back here. Click enter. So that will always be 100%. So any figures which are on this year will always be 100%. I'm not going to I'm going to move a bit fast here. Alt H VF. So 100% is that year in this case, and I could remove this conditional formatting of mine here that I put, which now is going to give me a bit of a problem. So let me just put this at 100, because I know I will not find numbers which are above 100%. And now if I copy this formula to the right, you'll see what I mean now. Yeah. It starts to give me a sense of, as a factor, yeah. Let me put this as 500% just to stop this for now. Yeah. So it's not telling me that what you're doing is, as a factor of 2014 financials, we're saying that sales are going to grow by 12% for 2016, 25%, 40%, 57%, 76%, 197%. So you're almost doubling to 222% for the local sales. For the total sales, it's going to 208%, right, as a factor of that specific year in this case. And that's just telling me just a sense of just how I expect the company to grow year on year. So we're saying, in essence, by the time we're in 2020, the company will be twice the size from a sales perspective. Other income will be 3 times the size, what we sort of started. This is just getting towards that 200% mark, so to say. But interesting, dividends will be 3 times what we were paying in 2020, interim dividends at least, but the total is 200% etc. So that's another way you could also do this common size financial statements. Yeah, and so this I could change here, common size financial statements, base 2014, base 2014, right? And so that could be another way of sort of like thinking about this. And I could also take this back, right? I could also take this back the same way and say, you know what, if I take this back to the beginning, how has it been? I mean, how are 209 financials compared in this case to those set of numbers? And this is how you sort of like start adding a bit more value. They're saying in 209, our business was roughly 50% or 56% of what it is today, right? And so we've really grown in this case. Our total dividends for 45%, profits around 47%. And so we've really moved ourselves then to the point where we're saying that now that's how the business looks like. Okay. Questions, comments. I want to stop with this first part. Questions or comments? Alvin Twase, how are you doing?
I'm doing okay. So I'm just following what you're doing, noting down, because I may not be able to pace up. I just want to note down, observe everything, and then I'll replicate the same after.
Okay, cool, brilliant. Collins Mwangi.
I see. Yeah. So I'm following. I think it makes sense. I think Walter was just wondering why necessarily people use common size FS.
I think, particularly in my work, it would be quite useful just to understand, like, for instance, growth. Because growth of companies you'd like to assess, for instance, is this a VC type backed business by like the growth that they're trying to forecast? What are some of the assumptions that are really necessary? So I think this exercise is quite useful at the moment. Yeah, that's what I would say.
Okay, brilliant. Just important to also just mention these. For us, especially when we get financials and I want to understand them, at times I just create the common sense financial statements because it's very easy to do it. And it starts getting me a better sense of how the company is structured, what the key costs are, what the key revenues are, what I need to focus on when I'm building the financial model, etc., etc. So there's so many ways you can be able to use them, use these common size financial statements at the end of the day. And particularly by the time we finish a financial model, I always want to see the common size financial statements because it's almost like I'll see the forecast. I will not be able to tell much from the forecast. But if I have these two sets of common size, one with a base, whatever the base in this case is, and the other one just a normal set, this tells me a lot. Just going through these, as you can imagine, if I sent you these and you saw like reviewing the financials and you knew what it meant, right? This already tells you quite a bit of the company, how the company is going to be growing, how the costs are going to be growing from that point, in this case, cost of sales, etc. Without looking at the financials at all, you get a very good sense by just looking at these two sets of common size financial statements. So very useful tool. Okay, so I'll leave that to you. You can do the balance sheet one, you can do the cash flow one at your own time. I will keep moving. Yeah. Of course, it's not balancing for one reason or the other. Okay, so we're done with the common size financials. Unless someone has a clear question, I want to move to translation of financial statements. Translation of financial statements. Now, just checking, any questions? We like making sure that we are moving together. And if we ask that question severally, it's because, when you're working with people online, you can't see their faces, yeah? When you're in a physical session, and especially now that the videos are off, you can only see people's faces. And so you can then check and see, okay, this person seems like I have a question. Let's tell them, do you have a question? So here we have to keep stopping and ask any questions. And Leanne is already telling me I have 26 minutes. So we'll focus on this bit and we'll finish in a second. Now, there's two aspects around translation. I've seen there's no questions, that's why I'm moving, of financial statements. And we're going to focus on the simplistic or the simple version, not probably the other version. Now, ideally, what should happen when you're translating financial statements? They need to be translated based on the balance, based on the balances you're bringing forward. Right? And what do I mean by this? If you look at the P&L statement, statement of comprehensive income, let me just call it what it is. Yeah. Statement of comprehensive income. Usually have your revenues, you have your costs, you have your profits. Right? If you go to your statement of financial position, you have your assets. I'm doing this very general, right? You have your, let's say, maybe long-term assets. Fixed assets. You have your current assets. You have your total assets. Right? Then you have your equity. You have your liabilities. Then you have your total equity and liabilities. Let's see the cash flows here out for a second. Now, if you think about the revenues, they're usually being translated at the current exchange rate. Yeah, current exchange rate. Okay. The costs, ideally, most of the costs will be at the current exchange rates. Profits will follow current exchange rates. But if you go to the balance sheet items, the balance sheet is not being translated at the current exchange rate, right? because we bought these assets at some point in time. And so from that perspective, because we bought them at some point in time, they're going to be translated on the basis of what the items are. So in this case, these are being translated using the historical exchange rates. Current assets, it depends. It depends. Some of these could be current, some of these could be historical, but most of it is current because debtors, inventory, and so forth. There's an element of current, and so this is a mixture, right? As you can imagine. Then if you move to the equity, that's historical. Liabilities, it depends. Could be historical. I mean, if you have a loan in this case, stroke current. And then you have sort of like the equities and the liabilities. In this case, it should be a mixture. Now, it goes without saying, that then if you translate your financial statements using different balances, if you translate your financial statements using different balances, one thing is going to happen. The thing that's going to happen is that your financials will not balance, for sure, right? And they won't balance because you've used different numbers to translate them in this case, which means that you need to have an adjustment that will be able to address that issue, right? In terms of how the numbers are going to look like in this case. And so that's an important thing for you to take into account. And that's why as I mentioned, when you're working on this, I'll take the simplistic version. I'll explain what the simplistic version in this case is. But I will not go through like the accounting way, because the accounting way is being done by the accountant in this case. But when you're building our financial models, we're probably not the accountant. So we're not going to focus on doing it like that. We're trying to, I mean, the balance sheet is important, but we're trying to get a sense of how our financials look and how they look when they've been translated to another exchange rate. So you have something called the cumulative translation adjustment, the CTA. It depends what it is, which ideally, what you would do then in our balance sheet to make sure it works cumulative. Cumulative translation adjustment, which I mean, there's different ways it's called, different ways of presenting it. And usually that's when, if you pick a company, and let me just think of some of the listed companies which are in multiple countries who have to present their financials in different currencies, maybe some of the financial institutions that you have, across board in this case. I don't know, if you take Safaricom, for instance, Safaricom now they're in Ethiopia, they're also in Kenya. They may need to present their financials in USD. And so the accounting team or the finance team, when they're presenting their financials, you'll see this line item, which will be able to now, make sure that the financials are balancing, because then you're saying that we are translating things at different rates in this case, right? Because some of this is current exchange rate, some of it is historical, and so forth. However, for our purposes in financial modeling, we don't focus on this because these can be quite complex, and I don't think necessarily it adds a lot of value to our decision making, especially when we are focused on the cash flow statement, we're focused on the profit and loss statement, and to a less degree to the balance sheet in this case. So in most cases, what we do is that we just translate the full focus in this case based on certain exchange rates in this case. So we assume we choose what exchange rate that is going to be, and then we're able to make the translation on that basis. And that's what we're going to do for our purposes. We'll not take the accounting route where we have to be almost quasi-accountant and ask, when were the assets bought? What was the exchange rate on that date? That number is going to be translated using that figure. When was the loan taken? The loan balance is going to be translated on that figure, in this case, the historical figure. No, we're not going to take that view. We're going to translate our full set of financials. Yeah. Let me just pause there to make sure that I'm clear. And the point I'm making is sinking in this case. So I don't know, who haven't I picked up on? Nicholas Adol.
So far, so good.
So far, so good. Okay. Cool. I don't know. I've picked up Molina. I hope now I pronounced it right.
Okay. Yeah. I don't have any questions up to this point.
And Molina, your audio is a bit muffled, so I keep losing what you're saying. But I heard you say you're okay.
Yeah, I'm fine. Yeah.
Okay, cool. There's something wrong with the audio, just FYI. So then to this extent, what we're going to do is we have financial statements, and let's go to our conceptual model and ask ourselves, what are we going to be doing for our translation of financial statements? What we're going to be doing is a few things. Number one, we need to create a new sheet. Create a new sheet. Yeah. Which we're going to call FinStat USD. And just FYI, for someone who has not cracked this code yet, FinStat is financial statements USD. Just in case you haven't cracked the code yet. So that's the first thing. We create a new sheet. And then the next thing we need to do, and we could do this, it doesn't matter the order. The next one is have our exchange rate. Exchange rate, our focus exchange rate. Generate our focus exchange rate. And then now, carry out the conversion. And we're done. Voila. Yeah. So that's what you're going to be doing. So the first thing is to create a new sheet, which we're going to call FinStat. We're going to convert this to USD. Sorry, I should have mentioned we're going to convert it to USD. We'll generate our exchange rate in a second. I'll come here to the FinStat, and I just use that approach. And I hope you've seen what I've just done. I think this is what we've been using. And I'll call this FinStat USD. Since it's FinStat USD, of course, I'll have to delete most of this content that is here. But on this, I have to be a bit careful how I'm deleting them, because I want to retain, actually I can delete everything because I will convert everything as I go. I can just select all the way down, even the cash flow statements, maybe not the balance sheet check, to the right. I'll just delete that. The same thing at this point. Quite a bit. So I have deleted that, and then of course I'll have to change the KES thousands to USD thousands in this case, and so I could make that change also. I select the entire line, Control H, and we had KES thousands, so I could just select change the KES to USD. Right. And if I just do that, then I end up with my USD thousands. And just check where areas where it may not have updated. Just make sure that it's updated. Use a sign. Okay. And there we are. I have my sheet now set. The next thing I need to do is just to focus on the exchange rate itself. And if you go to my input, there's some random, there's some light exchange rates that we have been given in this case. Let me just go to my input, see. And so we had been told that the exchange rate as 31.12 is KES USD 100. Depreciation of KES by USD per annum is 5% per annum in this case, and that's what I'm supposed to be using in this case. So for our purposes, we have two choices. The first option is to create a sheet that we're going to call the exchange rate, and then apply the exchange rates from there. And I think I'll just do that for the sake in this case, so that someone can be able to interpret that. So I'll come here and replicate this tab, move or copy. This is a temp tab that we've been using over and over. And I'll just create a new copy of this tab, and I'm going to put this maybe right before the FinStat USD, maybe before the common size. Click OK there. I have my new sheet here, which I'm going to call exchange rate. Exchange rate. I'm going to change the tab color to the calculation one. Not that. I want to change the tab color here and use a gray one that we've been using. That's our exchange rate. I don't need these balances, so I can delete these items, control minus, shift 9, and I have my exchange rate in this case. And so now I can use this to be able to create what my forecast is going to be, right? Now, in this case, we've just been given 5% depreciation every single year. So that's what we're going to be using, but you can use whatever exchange rate that you've agreed on. And I realize after 30 minutes. So I'll go to my FinStat, to my input, and select the exchange rate first. Input C, I've been given this. So these two assumptions, I want to copy this, KES by USD. Going to bring this in here, Control Shift Q, Control R. And I'm going to jump back here, depreciation, select that, drop it here, Control R, Shift F9, Control Shift P. Now what I'm being told that on 31st, it's going to be 100. Then after that, it will start getting, depreciating by 5% each year. So the first thing I'm going to do is, of course, I need to have some flags. Right? I need to have some flags, and I need to label these. I'm going to label these focus as USD exchange rate. So then I need to select some flags, and I need to ask myself which flags I need and what am I going to be doing. And in my mind, I need a flag that's going to tell me when I'm in December 2014, so that then I can put this 100 in December 2014. And then for each subsequent period, I can start now doing the 5%. So I also need another flag, which is going to tell me when I'm in the focus period, so that then I can do the focus, 5% during this focus period. So I've got my timesheet. Go to my timesheet here, where I have some of these flags. And just in case you've been struggling with this timesheet, we have a special module that covers how this module is created from the beginning till the end. And it's a free module. If you go to our course platform, you'll find there's one called Timesheets. Please go through that, and that should give you a sense of how that this has been created. And so in this case, I need a flag. I need a focus period flag, which I can look for here, and usually you'll find that has always been created. So the focus period flag, I have that here, so I can copy that here, and I can drop it in here. The exchange rate. I'll put it down here, Control Shift Q, Control Shift A. I'll jump back. The other one I need is not the last focus period flag, but I need a flag called the pre-focused period. That's a pre-focused. Let's see. I can also use a fast focus period, but let me just see if I have a flag, which is the last historical period flag, something like that, if you want to call it that. I don't think I have that. Yeah, actually, it's the acquisition of the initial balance sheet and date flag, which is here. That flag is always there, so I can use that. So I'll just come here and copy this, Control C. I'll go back. That's the exchange rate, sorry. Drop that here, Control Shift Q, Control Shift A in this case. Yeah. So now I can come here and just say, the forecast KES to USD exchange rate for the purpose of my financial model. Now, of course, important to mention that for these exchange rates, there's two ways of getting them. One way is that you could just get a forecast that from one of these websites, maybe the EIU Economist Intelligence Unit, from the World Bank, from the IMF, it depends, right? And you just use that as a forecast. Or you could create your own where you say, we have different scenarios. What if this moves 5%, 10%, etc.? What is the impact in our financial statement? So it just depends on what then your instructions are in this case. So I'll use, here we're saying we have some assumptions that you're going to be using, KES by USD. So we can come here, right? And so we can then do an if statement. We say if we're in this acquisition initial balance sheet date, please select and put 100, right? Otherwise, we say select the previous year's exchange rate multiplied by the 5% multiplied by the focus period flag. Let's do it so that you see what I'm talking about. But steps, remember, the first is if we're in this first focus period or the acquisition initial balance sheet date flag, put 100. If not, we go back and check for the previous year and we grow that by 5% and we multiply it by the focus period flag so that at least it's only happening during the focus period. So let's do that. When I do that, I'm going to use the if function, and you spend some time with Kipkorir talking about the if function and how it's applied. Let's say is equals if open brackets. So my first if is if I'm in this period, if the period is equals to 1, if this is equals to 1, value if true, what should I do? Right? Select this 100. I'm going to anchor that, put a comma. What if it's not equal to 100? What should I do? And that's what I was saying. If it's not equal to 100, pick the previous period's exchange rate, multiply that by 1 plus the growth rate, which is here, and anchor that, F4, 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 close brackets, and multiply that by the focus period flag in this case. Click enter. Yes, I should have put a bracket there. Control Shift A. And I can just check this to make sure that it's working. And here, based on that basis, then the figure is working. Of course, now if I change this to 5, 10%, whatever the figure is, then that's going to work just as well in this case. But remember, one thing that we need to be able to do is then to also ask what is going to be the exchange rate. Do you only want to forecast the focus period, or are you also going to be forecasting the historical period, right? And what exchange rate shall we use for the historical period? Now, ideally, we should have been given the historical financial statements, which then we can be able to say, for this year, the exchange rate was 90, 80, whatever, all the way. In this case, we've not been given that. So we have a question to answer in terms of what exchange rate we're going to be using. I think we should just apply the 100 in this case for this initial period. And assume that then during the pre-focus period, the exchange rate was 100. Yeah, just for purposes, because we don't know what the figure is, and we also want to show the financial statements for also the historical periods during the financial statements for also the historical periods, right? And so in this case, this is one of those situations that then in your input S, you'd have been given exchange rates, which says that historical exchange rates were what, so that then you can be able to incorporate them here. So this is something that I would ask the team that I'm building the financial model for to share this with me, historical exchange rates. So I am going to assume that if this was at 100 all the way, because I don't have the figure, but this is one of those that you could also, put a comment here, Control Shift Y, Shift F2, and just say confirm. Sorry, Shift F2, confirm the historical. And this is something we speak about, Control Shift T. We speak about how to do this in the subsequent lessons. So please just keep going, and you'll see how we create these square brackets and we put a comment. And then there's a way at the end we'll summarize all the columns that have these square brackets and comments, and then we can go back to them and ask the client, what was the issue here? Could we get this number? Right. For now, just allow me just to combine these. I'll just select these here, and I'll go to my exchange rate, and I say that we have the historical exchange rate here. That's a figure. And then after this, I'm just going to, just come in here and use. I'll still use a focus period flag in this case, and I say as by USD. USD. Here I can copy this. Once we're done with this, we are actually space that there. I say is equals if the focus period flag that we had up here is equals to 1. Well, if true, we use that. No. If open bracket, if the focus, if in the focus period, in this case, is equals to 1, we use the forecast exchange rate. Otherwise, we use the historical one. Just use that, Control Shift A, and that then gives me the exchange rate that I can use for the purposes of my financial model all the end. I know I've moved a bit fast there, but all I was doing is that because I didn't have the historical exchange rate, I had then to just figure out what number I would be able to use, but I've decided to use 100 for that period and then use the forecast for the rest of the period. Now with this in mind, then I can select these, and I want to finish on time. I can select these, and this is what I'm going to be using for my purposes, right? And what I could do is I'm going to drop this up here, Control Shift Q, Control Shift A. Because I've already completed that. And now the idea is just to do the translation of my financial statements using these exchange rates that I have created or I have gotten from a research source in this case. And so in this case, what I would be doing is just selecting the local sales, and the formula is the same formula. I go to the FinStat, I scroll up to the local sales. I'm going to select the 6 billion divided by, and the formula is going to be the same the whole way. The exchange rate, sorry, the FinStat USD here, divided by the first figure here, and I'm going to anchor the row, not the column, F4, F4. I've anchored the row in this case. I click enter. Oh, I started this a bit late, sorry. I think from the beginning here, apologies for that, is equals FinStat, and the figure is, remember you always use the correct period, 2009, that's where we're starting. And then I come back to my FinStat USD, 2009, the exchange rate that we've used in this case is that, F4, F4. Click enter, Control C, select till the end, Control R, I can copy this, and I can go all the way down, and I'm pasting special the values in this case, and not the values, but the formula, Alt H, V, Alt H, VF. If I refresh that, then I have my set of financials, which have just been translated using the exchange rate that I've selected in this case. And again, the same thing here, Control V, and all the way down. I mean, it's not we'll share the sheet with you right after this, but then you're able to translate the full set of the financials from the beginning. Nonny, I see you have to go and leave at 1 o'clock, and we are almost done. Yeah. So I hope this is clear. I mean, we'll share this recording, and we'll also share the full spreadsheet with these numbers then having been translated, right? And then if there's any questions this week on Friday, we have a Q&A session where you can be able to respond to that. Now, I know we've covered two things. We've covered common size or ratio analysis. We've covered translation. There's one thing we've not covered, which is the sensitivity and the scenario analysis. Now, for those two items, we have a session that we're going to be having on valuation, and I'm still the one who's going to be facilitating that. And I want to revisit those two sessions once you've done the valuation, because sensitivity especially is very useful once you have the valuation, because then you can say, if I change this variable, then what happens to my valuation? If I change this set of inputs, what happens? I know that for the, at least for the scenario, it's something that we've already covered when we started the session. There's a section where we did sort of like local sales and how those scenarios look like, but we'll revisit that during that time. So I've skipped those intentionally because I know once we do the evaluation session, we'll be able to come back to that. I know we have to stop, and Lian is telling me I have to stop because we said we finish at 1 o'clock and people have to jump onto other things. I'm going to stop there. There's a Q&A session this week. If there's questions from this session after you've watched the recording or from today, feel free to ask those questions and we'll respond to them. But immediately after this session, you'll get a copy of this spreadsheet and the video. And then the spreadsheet would have been completed, of course, with the translation all the way to the other set of financials. Thank you very much, everybody, for your patience and for listening in and for being very active during the session. I hope you've picked out something, at least to support your work. Leanne, I'm not going to ask them for any comments in this case. I'm going to jump straight to you. Is there anything else I need to mention, Leanne?
I just to correct something. So the Q&A is next week. We had one last week. So next week. But if you have any questions, feel free to write in the WhatsApp group and Kelvin will attend. Thank you.
Yeah. Thank you very much, everybody. Have a lovely afternoon. You'll receive all the information as indicated, and there's a Q&A next week. And then any questions you can ask us always. And with that, all the best for your lunch and for the rest of the day.